Well, the federal government's recent decision to increase the capital gains tax has a lot of people wondering how it will impact their investments, but not just stocks. In the property market, people and families who, for example, own cottages are weighing the tax ramifications. That's possibly creating the supply-demand story we talk about in the property market, maybe starting to change those dynamics a little bit as well. Let's get some perspective now from Michelle Kelly. She is editor at Cottage Life, joins me here in studio to talk a little bit more about it. Michelle, thanks very much for being with us.
Yeah, thank you for having me on.
So, are there a lot of conversations taking place, first and foremost?
Yes, since they decided a couple of weeks ago to increase the inclusion rate on the capital gains tax, it has really made a lot of cottagers quite frightened that they're going to have to sell their sort of multi-generational family cottages out of the family, simply because when they want to pass it on, they're going to be hit with an increased tax that they weren't expecting, and they really aren't able to pay, because so many cottagers, you know, I think there's this conception that cottagers are super wealthy. They have 10-slip boathouse on Lake Joe, and that is true, of course, for very few people. Most cottagers are on, you know, small 1960s Viceroys, 3 bedrooms on little lakes all throughout the country, and those are the people who, you know, are not among the 1% who are able to pay this capital gains tax rate, and so they are really frightened that they're going to lose these cottages that are, you know, quite dear to them and have been for a really long time.
So even though if a property's been in a family for a very long time and you're looking at that, you know, as a family and thinking, okay, well, this has been a nice thing that the value has gone up. It's actually, when you look at what the tax ramifications of that, where things, there's almost a sticker shock, I guess. Well,
that's right. And I think that it's particularly relevant right now because over the pandemic, cottage prices increased drastically, like over some went up 100%, depending on where you are, how close to the cities you were. People were just going crazy for cottages. So it's in a very short amount of time, a lot of these cottagers have found that their property value has gone up, you know, hundreds of thousands of dollars, which means when they go to sell or pass it on to their children, that they have exceeded that $250,000 rate. So they're not going to have to pay 50%, they're going to have to pay 66.5%, which again, because they're not super wealthy people, they don't have that kind of money lying around. So those are the people who are really nervous because if they don't have a strong succession plan in place, they're going to have to sort of pass on that tax to their kids or figure out a way to pay it themselves.
So you cover the industry, so you're not here giving tax advice or anything per se, but have you noticed in those conversations, I guess it's just the fact that there is a deadline looming.
Yes.
And I would imagine that for some families, the idea of selling the property, I don't want to generalize here, but it might get pushed out.
That's right.
And so now's the time to have the conversation around, are we going to sell before this deadline, or are we going to be keeping this property in the family for a long time?
That's right. This short deadline has really forced people to talk about this subject of succession, which is tricky, right? You're talking about family dynamics. You're talking about a beloved family place. It's really hard. So, you know, Cottage Life has a newsletter that we call Family Matters that goes over all sorts of different strategies that you can use for cottage succession. We work with a tax lawyer on that who is really knowledgeable of sort of the ins and outs, has done a ton of succession planning in his career. But I think, you know, this deadline of June 25th is quite tricky because it does take a long time, as you know, we all know, to work out these kinds of plans, particularly when there's that emotional family side to it. And
so I guess for all the considerations for families right now and owners of cottages, does this, if all of a sudden there is a sizable increase in the number of properties that maybe are coming to market, does that introduce another variable in the property market for consideration?
Right. It's a great point. So just last week, RE/MAX was saying that they don't anticipate that this increase into the tax rate will have a drastic difference on the market right away. I think what it will do, though, is over the coming months and years, as people start to realize the value, they might think, okay, well, I could either get the value of this cottage or we can continue having this cottage, as it's so hard for the next generation to get into any kind of property. So freeing up that money is helpful for getting on the property ladder no matter where you are. So my suspicion is that, yes, it will probably shake loose eventually more cottages onto the market because it's been very tight the last couple of years, although we're sort of starting to see that change. But cottages, the supply has been very low. So I do anticipate that this could shake things up sort of as we get further down the road.
And you talked about how things have progressed. You have, you know, a lot of properties that maybe have been in a family for a long time. And then you have, in some cases, some some very big and shiny cottage properties. But there is a community around cottage country.
Yes.
And I guess if we're talking about a possible change brought on by a capital gains tax change, and that also maybe starts to change sort of the community dynamics?
Yeah, it's a great point. So a lot of those people who have been in the same cottage for many generations and want to pass it on to their kids, they're very invested in those cottage communities. They're, out there trying to keep invasive species out of the lake. They're forging ties with the local community, donating books to the library, all sorts of different things that cottagers do in cottage country. And it really would be a shame to lose that element, which is possible if we start selling these cottages out to, people who don't have the same deep roots in the community. So, at Cottage Life, we've heard a lot about that, and we want to make sure that those people are being accounted for, and that, a gain like this isn't going to be pushing out the kinds of people who really do have that sort of deep emotional investment in their properties, in their cottage communities, which is why we're sort of hoping the government will reevaluate this for cottagers specifically, because they're kind of caught in something that really didn't intend on catching them, I think.
Yeah, no, we certainly weren't. This is about capital gains taxes.
Exactly.
That's really what it's about, not the
Exactly.
issues that you're talking about. But it is good consideration. Michelle, thanks for your perspective. Appreciate it.
Yes, thank you.
Michelle Kelly is the editor at Cottage Life, joining us here in studio. Time for a quick